The NASDAQ over the past 2 trading days has been significantly increasing in value as we approach major earning report releases, specifically from large technology-based companies such as Microsoft and Tesla. But let's look at the charts to get a better understanding of how the price may be moving going forward. Good morning, ladies and gentlemen. My name is Michalis and I'm the market analyst here at NAGA, and I'd like to welcome everybody to a very short video where we're going to be looking at technical analysis on a 1 hour time frame and looking specifically at the NASDAQ. So like I said, here we've got the NASDAQ on a 1 hour time frame, and we've got a few indicators which are part of the technical analysis family. Here we've got what is known as the Ichimoku trading cloud. We've also got a 15-day exponential moving average, which is going to be acting as a trend line. And at the very bottom here, we also have the stochastic oscillator. Now, what we're trying to do is use these 3 indicators to give us a good understanding of the price condition and the trend, and how we can look at this information to determine how the price is likely to move going forward. Now, if we start off with the Ichimoku trading cloud and also the trend line, it's very easy to understand what type of indication it's given us in terms of the price condition. When the price is above the Ichimoku trading cloud, it's given us an indication that the price is going to continue moving further up. At the moment, it has been above the trading cloud since Friday. We can see that since Friday, we've had a very strong price movement. The price is, of course, also above the trend line, which is the 20-day exponential moving average. And we can see that when the price does move back towards the trend line, especially outside the trading hours, for example here, and we are also currently outside the trading hours here as well, we can see that during these periods it does slightly decline and fall into a price range and goes slightly closer to that trend line. And we can see that as it approaches this trend line, it does again find support. So if the price, specifically this morning while we're outside of trading hours, if it does continue to move closer to the trend line, we have to take into consideration that potentially the price may find support once the market opens. So we've got 2 indications, both are bullish indications at the moment in terms of the Ichimoku trading clouds and also the trend lines. We can see the price is above the trading clouds. The price is also above the trend line at the moment. We can see that it is indeed finding support so far on the trend line. So we have 2 indications that the price potentially may continue to increase in value, but we have to, of course, keep into consideration that the price is massively going to be influenced by what is released by Microsoft and Tesla in terms of their earnings reports and their earnings per share figure. Now, if we look at the stochastic oscillator, we can see that the stochastic oscillator is very high. The stochastic oscillator is currently at above 82, so the price is slightly overbought, but we can very clearly see the oscillator that buyers currently have control of the market. What we have to be slightly careful of here is that we're not going to get a divergence signal. Now, to get a better understanding of a divergence signal, I think it's better we look at a 15-minute time frame and we look at the relative strength index, because this gives us a stronger and clearer signal in terms of divergence. Now here we've got multiple moving averages and we've got the relative strength index. We've got a 7-day exponential moving average, which is this orange line here. Then we've got a 15-day simple moving average. And we've also got a 75-day exponential moving average, which is the black line here. So what is divergence? Divergence is basically when we have an oscillator, such as the RSI, which has formed 2 waves. And we can see we've got a wave here, and it formed a top here, and then it formed another wave, and the top was slightly lower. So we actually have a lower low on the RSI. Whereas if we look at the price movement itself, we had the very strong wave here on the 15-minute time frame, and we had a price high here. Then we had the second wave and we had a higher high. So on the price, we've got a higher high, but if we look at the relative strength index, we actually have a lower high. So this is what is known as divergence. We can see the contradiction there between the indicator and the price movement, and it's basically given us an indication that the price may lose momentum. Now, so far it has lost momentum, partially because we are outside of trading hours, but we have to keep an eye on the price movement and ensure that it's not actually going to start to form downward crossovers on the moving average, start to decline below the 75-day exponential moving average as well. So this is what divergence is currently indicating us. Whereas if we're looking at the moving averages, specifically on Friday and during yesterday's trading session, we had very clear indications that the price is going to move up. So we can see we had upward crossovers here, and all moving averages here really started to widen and move upwards. So we've got very strong bullish indications, and we can see that the price significantly increased in value after these indications. Now, the other thing to keep in mind is that we did get to an overbought area on the RSI, which is at this price here. And we can see that it was very close to where the price started to lose momentum and get a divergence indication. Whereas when we're looking at this price movement here, we've got great areas where potentially we may be able to have entered the market. So what are we currently looking at in terms of today's trading session? Now we can see again the price has moved into a price range. Moving averages have grouped up together. So what we can use this for is an indication as to whether we're going to get an upward crossover like we saw here, or a downward crossover. Now, if we've got an upward crossover, we have an indication of further bullish price movement. If we've got a downward crossover, then we've got indication that we're actually potentially going to see a price correction. The last thing I will say is that you can also look at the support and resistant lines. Here we've got both support and resistant lines. Now, if the price is going to decline below this area here, then we have an indication that the price is actually going to potentially form a price correction, in which case we can aim to the previous support level, which we can see is this price range here. Now, if the price is going to continue its bullish price movement, and then to get a signal from the breakout, we need the price to break out from this resistance point. So that brings us to the end of today's technical analysis video. Hopefully you found it educational and informative. Trade safe, trade responsibly, and hopefully we'll see you very soon on one of our webinars or on one of our videos. In the meantime, goodbye.